Hey traders, this is Christian from Tribeca Trade Group, and this is your end of day recap, end of week recap for Friday, June 14th. Happy Friday, everybody. And as always, I like to do these videos at the end of the week and kind of look at the week's performance, come up with some observations for the week, and more importantly, look ahead to next week and try to take a look and see what some of the catalysts might be for the week, and how we can kind of position for that a little bit, or how I'm looking to position for that, because of course the video is for information purposes only. So everything that we're going over here again is not advice or recommendations. So very easy to start with is the S&P chart. This is something every day I start off with. And notice that we didn't really go anywhere all week long. I thought that this was a particularly difficult week to trade, and we've talked about this all week long. But if you're basically sitting in stock positions, you probably could have been at the beach, and no harm, no foul. Big difference between trading stock and trading options. Options, a lot of chop, and unless what you were doing all week was selling premium, very difficult to trade when you've got choppy markets and not trending markets. So that's what I saw for the week. Just in the very short term, no trend, right? And I see that with just a lot of stocks for the week. Of course, this is looking very short term. And if you're a trader and if you've been trading for a while, you kind of know that you go through periods like this. And the best thing, same thing in downturns, right? You just kind of have to get through it and try not to overtrade, try not to get overexposed, try not to get frustrated. Because it becomes a mental challenge when you have this for several days this week, where most of which the opening print was around the high of the day or the first 15 minutes, and then we give back a lot of the gain. So the level to remain to watch is 2,900 in the S&P futures, and I would note what happened when we were trying to get into value last month in June, and we failed. So I'm not saying that that's going to happen and we're going to turn lower. You just kind of have to wait for that direction to be confirmed a little bit, and also look underneath the hood. Look what's going on in some of the sectors, some of the groups, and we'll talk a little bit about that. Some positives and negatives, but what I like to do, and I've been doing this more and more just because I've been seeing some things that necessarily I don't like in the short term. But we've been kind of looking at this performance for what we get from the open, right? Not just the overall performance for the day, but the performance from open to closed. That helps me see where buyers are coming in and what areas of the market are getting sold, and or getting shorted. Right, so just three, and anything that I've got highlighted is a move more than 25 basis points, so more than 1/4%. So very little going on. And again, this is not overall performance. So even though we started down on the day, there was, again, and this has been the trend all week, there's really not a lot of buying, not the dip so much, but just there's no follow through. Nobody's really putting it. Nobody put a lot of. It did not seem that there was a lot of money that was put to work in areas, except for some of the defensive areas. Most of the week, now it wasn't today because gold gave a fake out move today and actually finished flat after being up around 1% pre-market. But gold miners have been on the list almost every day of the week in terms of best performing throughout the day. If you look, the home builders, which is interesting, I'm going to look at that chart in a minute. They were also on the leaderboard last week, but they finished up 1% today and showed some nice relative strength. The utilities, they've been at it all week long. They've been moving from low to high every day. The banks kind of snuck into green towards the end of the day. Now this doesn't look a little bit better. I was looking, I flashed this in the trading room a couple times during the day. And this did improve, even though this looks kind of ugly. It did improve because there was about this many sectors that were down 25 basis points. Interesting that the not gold, energy names continue to get smoked. It seems like there is some issues there, and they just continue to go down. These are trends. The oil names are in trends. They're in downtrends, and it seems any type of bid in this group, if it outperforms, like it outperformed, I think yesterday, and sellers just come in and whack these names, and there really wasn't that big of a move. If there's going to be a conflict with Iran, certainly there's not a lot of things that are really telling us that that's the case, because oil is not going up. And I first thing I saw yesterday morning, and heard on Bloomberg Radio was like, "Oh, oil is spiking," and I looked and I'm like, "Oil's up 2%. What am I missing? It was down 4% the day before." So I don't know. I understand that they're trying to, they've got ratings that they need to boost. But I'm like, oil was up 2% yesterday. I'm like, that's not a crisis. Uh, but in any event, sometimes that's just the headlines, right? So a lot of groups down. The software group was down as well. I thought, we continue to see money kind of go into this group. But I've talked about having to be patient from when these names spiked on that deal with Tableau Software and Salesforce. They've been giving back gains mainly all week, except for a couple one-offs in the group. Steel also is another group that's been giving back some gains. And then just looking at the FANG stocks, they're a mixed bunch. I've been talking about how I hate this group, but it is what it is. At one point, they will catch some momentum, but I don't know. I don't see it. I think Netflix is now down 5 days in a row. I'll just show you. I should be bouncing around some charts here, and I'll start doing that now. But I was looking at Netflix with a couple members today. What is this? 1, 2, 3, 4, 5 days down. So it's right at the 200-day moving average, which I know some people will be looking at for a potential bounce. After 5 down days, if you're looking for like a quick trade, I see this version point of control down here, and as long as we're below value, I would say that this is something that you have to watch out for. Now, if you get back inside value, back above 342.73, then you don't have to worry about that purple line. But these version point of controls really act as magnets, right? So you have to be cognizant of that, and that might be a better place to try like a reversal trade of some sort. Again, trendless. This Netflix is, and it's leaning to the downside. But after 6 down days in a row, one, two, three, four, or 5 down days in a row, it's probably due for some type of a short bounce. But I don't have anything on. I'm not looking to play it right now. Amazon is another name that seems like didn't move much the last couple days after being up last week. Yeah, I'm sure some of these names, I think, and I'll be going through this for the member webinar, for the member video this weekend. But I'm sure that there's going to be a lot of names that are coiled up in the short term. Like look at the value area for next week. Look at how slim this thing is. So we could see some names, move in one direction or another, a decent clip, considering that the movement was so tight for this week. So let's get away. I think I covered everything I wanted to in this spreadsheet. Also, I mentioned bonds did sell off. Not bonds. Gold sold off from this morning, down 0.5%. Small caps, interesting to see them. They outperformed, and they can't make a trend either. So again, one day up, one day down. They were outperformed yesterday, and today they underperformed. So really tricky with the small caps. And right now, I said it in the beginning of the video, but just I keep looking at things and saying trendless in some areas of the market. And a lot of areas of the market, it looks trendless and it looks choppy. There are some things that are doing pretty well, and let's shift over to, so that again is just for the day. Let's look at just briefly what we did for the week, and I'll start with the major performance for the week. This was the previous weeks. Remember, it's like a distant memory, but 2 weeks ago, or not 2 weeks ago, not this week, but last week, I should say. We had that big move up in the indices. SPY was up 4.5%. The Qs were up 4%. So again, digestion is something normal. So you just have to kind of, as I always say, take a step back and have a little bit more of a view than just a couple days. But most things did finish in the green this week. There's just not a lot of movement, right? These were things that we were talking about, by the way. If you're not a member of Tribeca Trade Group, get on board. This is our checklist for when you do need to hedge, right? So just like, you know, one of the things that I already mentioned is just because we're not moving, it doesn't mean that you need to like worry about putting a hedge on. There's specific things that I would be looking for, and that's why we put that in the weekend newsletter last week. Even though we had a big week, big up week, right? I mean, you always want to be looking at your risk, in my opinion, and so that's why I put this about kind of a checklist to watch for when you need a hedge. So right now, this week you didn't need any positions really, or less positions. Performance. Again, that was the previous week. This is this week. It's actually shocking. So this is 5-day performance, which again I always like to look at this at the end of the week because it just kind of tells you or validates what the areas that were outperforming, and retail actually did it. Retail and consumer discretionary, again, not huge, right? I mean, nothing was up more than 2.5% for the week, but consumer discretionary was up 2.3%. Again, on the downside, worst 5-day performance. And this should say this week's performance, but I know it says last week's. That's a typo. Oil and gas names were down. Defense names were down on the back of that Raytheon UTX deal, which the street didn't like it. Semis got hit, and that was mostly today on the back of Broadcom. Like I said, software did not have a good week this week, even though that deal was announced. Those were up big, but they gave back a lot of their profits throughout the middle of the week. Uh, International performers, ARGT and Saudi Arabia. No surprise there. Those are two names that are being added to the MSCI indices. So they when that happens, when MSCI decides to make a change in their emerging markets in indices, and there's a whole bunch of assets that track those. Those will those definitely got bid up. Greece was also did well. Russia did well for the week. So some emerging markets, some new members of the emerging markets. What didn't do well? Nigeria, Turkey, Philippines. So kind of mixed, right? India, which has been a pretty decent performer until this week, which was down 2% for the week. So that's the performance for the week. We'll take a look at a couple charts. One is we'll look at the best performers, and we'll switch over here. Consumer discretionary. That's at the top of value for the month. So it rose all the way through. That's called the 80% rule, right? When you start the month below value and you climb into value, establish yourself. There's an 80% chance that you go all the way through. So again, looking at where we are in the S&P, we've done that 80% rule, same thing, but we're waiting for what's next in the cards. I like this group. I've been trading this in and out of some housing names. Last week I was in a little bit of DHI and LEN, Lennar, and what is it, DR Homes or DR Homes, and I took those trades off. Again, I've been kind of quick with some trades, maybe leaving a little bit of money on the table. Home Depot. So this does not look bad. The reason why I didn't go into this, and in hindsight, maybe I should have just went into the stock because the options are difficult in this home construction ETF. Home builders are about 60% of this ETF, but we did hit Home Depot pretty perfectly. Notice that version point of control is taken out. That was my target for what I wanted to see in Home Depot. So nice trade in this, and it actually had its best day of the week. It took a little while for this thing to get going, but got going yesterday and today. And these are the things that seem to be moving around, right? I mentioned utilities. Utilities are right back to a 52-week high. This was a nice check back, but unfortunately, and I know because these are not the most sexiest areas that people want to trade all the time. And I know some traders struggle with taking some of these positions because they want to mostly focus on tech and maybe consumer discretionary, biotech and healthcare, but that's not what's performing well right now. You're getting spurts of performance in those groups. The trend right now, and interesting because somebody did buy some puts in this for next week. Keep in mind that we've got quadruple witching next week, where all of the S&P and Nasdaq indices gets reshuffled. What they do basically is sell the winners and buy the losers. They also include some names, but if you're not familiar with that process, you could just Google S&P rebalance. That this happens quarterly. I know that it gets lost in the shuffle a little bit, but so this could kind of change. Going back to what we were saying about not seeing a lot of movement this week. I think we'll see decent movement in single stocks next week because of quadruple witching. That all happens on Friday. That all the index rebalances, every name gets rebalanced in these S&P and Nasdaq indices. So that happens on close of business on Friday of next week. But the announcements are actually announced now. S&P announces those announcements for next week on their website. You have to pay. You have to be a subscriber to S&P to get all their files. But what happens is all the brokers, the portfolio desks who are doing these big trades pre-position for this trade. So some of them have already pre-positioned even though they don't know the official announcements, but they'll be doing that all next week. So you should see heightened volume and some whippy moves in some stocks next week, and a lot of that will be attributed to pre-positioning for these index rebalances. All right, so one of the things I noticed that so where I'm going with this, somebody threw down $100,000 in premium to see if this area would come in a little bit. So it could be, right? These are some of the strongest groups right now is low volatility equities, and look at the trend that this has been in, right? It just looks like a completely different picture. So maybe somebody thinking that they get sold a little bit next week because of the rebalance, because they have been the winners. So we'll keep an eye on that next week. I did not take that trade, just kind of noticed it. But, what else, right? Consumer staples, they're at 52-week highs. So again, a much different looking market than just looking at the overall S&P. There's definitely groups that are have been performing extremely well. They're just a little bit they're not ones that a lot of day traders, some day traders are taking advantage of them, but they're just a little bit different groups. And if you look at this relationship, right, high beta versus low beta, remember that at the end of May, when we had, when that was towards the end of a decent pullback, low volatility was holding in there beautifully. And so this got a little bit stretched. Notice we were higher than this relationship got higher than where it was in December. It pulled back a little bit, but last week's very strong. And you could see in the RSI how overbought low volatility equities got to high beta, areas. So again, a little bit of diversification has helped in this market, because if you're all loaded in the same groups of stocks, momentum stocks, they have certainly not been the performers. Now again, that could change next week. So what did we see today in terms of option activity? There was a couple interesting trades today. I'll share these with you. I don't always share these in the video, but Docu, I day traded this one. This got really beaten up after earnings, even though their earnings seemed to be fine. RDFN had some calls that went up in this one. I looked at this one. Again, with these, right? My opinion is you could day trade some of them, like I did with Docu today, and made some money on it. FND was another one, but the whole thing is, right, there's the majority of these trades, I could tell you right now, they're not going to work, right? So even though how aggressive they are, it's just how it is. And this environment, I think you just have to be more picky and choosy, right? I know nobody talks about losers with the option activity, but I could tell you right now, there probably will be 50% of those orders are not going to work. So it's like a coin flip. But again, for me, it's just ideas. FND, this was a good one. We some traders took advantage of this in the room today. Notice that this got into value, so I think this could have more to go. This is floor and decor, right? I mentioned the home improvement group did very well. Um, this one could continue to work for next week. You could use a stop of 38 bucks. Again, don't necessarily have to trade options with this one. Can trade this one via stock. A couple other names to point out in option activity. I'm not going to go over all the charts, but there was a little bit of buying in the materials space. Alcoa saw some calls. Also, if you look further down, Vale saw some calls. BHP, a couple of steel names in that group. So it was a little bit different. Somebody snuck in also NRG, which has been a oil and it's a gas and utility name. That hasn't performed like the rest of the group. Really has gotten beaten up. So somebody came in and did a little bit of a dip buy in that name today. Also Roku right before the close. Somebody bought July 5th calls. Interesting in that one. Also some Splunk. I have to check to see if this one increased open interest. Also Ring. So a couple names that I'm focused. Again, I'm happy to kind of share some ideas. I don't know if I'm going to be doing these videos for the public that much longer. I like just doing the member ones. So we'll see if I'm going to be doing these. Maybe I just do one or two videos for the public for free. But just it is what it is. For today, I'll give you a couple of ideas. Ring traded RNG. We saw some calls earlier in the week in this one, and there's 2,700 of the July 120 calls. So, that's a lot of premium to spend on something in a very choppy market. Those are around $5, 5.20, 5.30 for just a July option. That seems pricey to me, but maybe a 120, 130 call spread might be a little bit of a better idea. Or, of course, just owning stock versus a stop of 116 in RNG. Twilio. I've been looking at this name a lot. Usually when this name chops around and doesn't do much, it's usually a good time to buy it. I would be long Twilio versus a 137.15 stop. Again, sometimes chop in some of these names are really, really good because they end up exploding higher after a good portion or even after a little bit of a pullback into support. Another name that's on my watch list for next week is Wix. Also kind of choppy this week, moving back into support. You could be long this one versus a tight stop of 140.44, right? Top of value. So those are a couple of names. I've got some other names on my list. We talked about the home builders as well. I think that's an interesting group. What else for next week to watch? And then we'll kind of end the video, keep it a little bit short this week. I mentioned quad witching, FOMC. What is going to happen with these expectations? I think these expectations are way out of whack, but that's just me. And I'm happy to give you my opinions on things when I really have them. And I talked about this in yesterday's video too, but they're expecting almost a 25% chance that they're going to cut rates. Now, I have heard, and I've said it many times, I'll say it again, we've not heard Powell say anything about a rate cut coming. What we did hear him say is that he would be he would be there if it's required. But we saw today, and there's an 85% chance that they're going to cut in July. This does not seem right to me. If you look at today's economics, there's nothing besides we had one bad jobs report. I don't think they're going to cut rates on one jobs. They don't necessarily do that in my experience. Just one weak job report, they usually don't cut rates. They usually cut rates when it's too late, after several bad reports. Retail sales. Remember last month everybody was all upset because retail sales were horrible? Well, they revised all those reports up. So apparently that report was not completely correct. And this month was higher than expected. So, this doesn't make any sense to me. I would think as well, maybe the market is pricing it in because we saw, if you look at what Broadcom said in their report, they are seeing more uncertainty in their environment and they lowered their their forecast. So, maybe after next earnings cycle, if it's really bad, if it's piss poor, and everybody's lowering their guidance because of the trade war, okay, maybe it's in the but I would think the stocks are going to have to get crushed for them to do that. So this doesn't seem like a great environment, right? So I know I mentioned price, um, is the most important thing to watch, but I am definitely worried about, if Powell comes out and speaks on Wednesday and says that they're not going to cut rates, the market is going to, I think, uh, get hit very hard because they're expecting, it's with those Fed fund futures, the market is pricing it in. So I don't like that at all. The other thing that also seems a little bit weird to me was the VIX was down today and stocks were not moving up. Right? I know everybody looks at this and they don't like when the VIX goes up when stocks are going up. I don't really like when the VIX goes down and stocks are going down either. So that doesn't seem right to me. But so again, those are just a couple things that under the hood that have me a little bit cautious. But again, I'll be watching for that price and see what's going to happen. I think also this was a little bit low volume this week. So, I know with low volume not to really draw too many conclusions. Let's see what the S&P vol. Yeah, I mean, you could see this was pretty low volume this week. So we'll leave it there for the week. Those are a couple things. I think top of the list: quadruple witching, FOMC meeting, and then watching what happens if we see any change of trend other than just the defensives pushing us higher. So that's it for the recap. Again, we'll have much more for members in the weekend video and the newsletter that we put out as well. So have a great weekend, everybody, and have a happy Father's Day as well.